Hello and welcome to this special edition of the video market report from Nour and Hammoury in coordination with Orbex. In this video, we will take again a look at the most important event of the week, if not the most important event of the year, which is of course the Federal Reserve decision on Wednesday. Recently, there are a lot of talks in the market that the Federal Reserve will raise rates finally after almost a year from the first rate hike, which basically happened after the financial crisis almost a decade back in December of last year, despite the fact that also that the Federal Reserve promised the world to raise rates 4 times this year. Moreover, the Federal Reserve also, which is the most important thing here, is that the Fed fund futures are pricing in a 100% chance for a rate hike on Wednesday, which never happened before. However, despite all of these expectations, I will keep a good margin for a possible surprise by the Fed. If you're asking why, well, this year has been a shock for analysts and also even if not all of the economists around the world. Many events including the Brexit and the US elections came in as a shock, as the expectations were totally the opposite way. Yet there are also many things involved in today's decision or on Wednesday's decision, and we can also first of all say that the rate hike itself even doesn't matter that much anymore, as the market already priced in the rate hike in advance. Yet it is also important to mention that this is the second also hike after the well-known financial crisis, which should be considered as only small steps toward what's so-called normalization. Another factor in is basically the US elections, and this is the first Federal Reserve meeting after the US elections, or after the US election, which concluded with Donald Trump to be the president-elect or the new president of the United States, and such outcome is likely to influence the Federal Reserve decision, but we don't know yet. We will definitely know on Wednesday whether if the election definitely influenced the Fed's decision, but especially that Trump had strong views regarding the Federal Reserve policy and also the Federal Reserve Chair, Janet Yellen. One of the most important factors also on why the Federal Reserve might indeed raise rates in this meeting is basically the credibility of the Federal Reserve. Last year, the Federal Reserve managed to raise rates amid questions regarding its credibility, as it spent 2015 or the entire year of 2015 promising the world to raise rates many times, but they ended up raising it once only, or only once. But as for this decision, I believe they can't even afford to delay once again, as they will be in the corner and will be forced to give reasonable explanation for delaying the rate hike here. If you're asking also what matters the most in today's decision, first of all, there are many also factors involved, but however, the rate hike decision, as I said, is already priced in the market, which means that raising rates might not even help the US dollar higher or significantly higher, or push the dollar significantly higher. But however, what matters the most in this decision, first of all, is the economic projections, whether they downgrade it or even upgrade it. And most importantly, which is what the Federal Reserve future plans. Which basically will come in during the press conference of the Janet Yellen. But there are two scenarios that I believe that might happen in this meeting. First of all, what we call it hawkish hike, which means that the Federal Reserve will show a strong note, strong support, and strong language, which also means that traders will be pricing in another rate hike very soon. And in return, of course, we might see the US dollar even continue to rise further across the board, while equities may suffer a notable sell-off. But we don't think so that even the equities will decline that much. But also, traders should keep an eye on the 10-year yield, which is already above 2.5%, and this is also not pleasing the Federal Reserve. The second option is something we call it Dovish hike, which is basically more possible for us. This means that the Federal Reserve will send a signal to the market that future rate hike is far away and might not even be before Q2 of next year or the end of Q2 of next year. But in return, the US dollar may also suffer and might even decline below the 100 point barrier, and we might see even a top in the US dollar, already top in the US dollar, while equities would be happy to hear such news. One of the most important, again, events of this meeting is don't forget to watch the press conference of the Federal Reserve, Janet Yellen, as it will be the key for the market trends for the next few weeks, as she will be giving us or answering questions about the Federal Reserve future plans and what's basically the Federal Reserve policy, especially after, first of all, the second rate hike. In addition to that, what if she will be even mentioning that that the new president is also influenced by, or the elections influence their decision in the Federal Reserve, and when we would need or when we would see a new rate hike. This is what most of the traders or most of the investors in the market will be looking for. What is next, and and not only what's now. We need to know what's next. So this is a quick note about the Federal Reserve decision. You can also follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest reports. Also, we will keep you posted about this decision throughout the day, and also we will cover it also on Twitter and also on YouTube. So that's it for today. Thank you for watching. I'll see you once again in another new video, hopefully next week.